Welcome to the Deep Dive. We're your shortcut to understanding the bigger picture behind the headlines.
That's right.
And today, we are plunging into the latest financial results from, well, an industrial giant, Bosch Ltd.
Yep. Their Q1 for the fiscal year 2026. That's covering April to June 2025.
Exactly. And our mission, as always, is to cut through all that data, the jargon, basically pull out the key insights.
Find out what really matters.
Yeah, find the surprising stuff and figure out what it all means for you.
And we've got the goods to do it. Bosch's own financial reports, investor presentations, their press release.
The whole stack. And honestly, this quarter, it tells a really fascinating story about where a company like Bosch is heading. It's quite revealing.
It really is.
Okay, so let's get into it. When you first looked at these Q1 numbers, what was the immediate headline for you? What jumped out?
Well, I mean, the first thing you notice is just the sheer scale of the profit growth this quarter. It's pretty remarkable.
Okay.
So their total revenue from operations for Q1 FY26, it landed at INR 4,789 crores.
Okay. 4,789 crores. And for our listeners, that's Indian rupees, roughly what, 575 million US dollars?
Yeah, about that. And that revenue figure itself is solid,
Yeah.
up 10.9% compared to the same time last year.
Decent growth.
Decent growth. But like I said, the real headline grabber is the profit after tax, the PAT.
Right.
It hit INR 11,115 crores. That works out to 23.3% of their total revenue.
Wow, okay, that is high.
It is. And get this, that's a 139.6% jump compared to Q1 last year.
Whoa, 140%
No,
really.
and it's up 141.5% even from the previous quarter, Q4 FY25.
Okay, that near 140% jump year on year, that's definitely eye-popping. But, when we see numbers that big, the immediate question is this sustainable? Or is there something specific, maybe a one-off thing driving it?
Exactly. That's the crucial question to ask.
So what did propel this? And, was the market expecting something like this?
Well, first off, the underlying operational performance was strong. Let's be clear on that. Their profit before tax, or PBT, if you strip out what they call exceptional items, that was INR 838 crores.
Right.
That's about 17.5% of revenue.
Yeah.
And that itself is up a healthy 37.2% over the same quarter last year.
So the core business is doing better. What drove that underlying improvement?
Mainly a favorable product mix and also some reduction in material costs. So good operational management there.
Okay.
However, that huge PT increase we mentioned, the 140% one, that was primarily overwhelmingly due to a major exceptional item.
Oh, okay.
There it is. Yeah. Bosch recognized a really substantial profit, about INR 5,560 million, from selling off a business unit.
Which one was that?
It was their Video Solutions, Access and Intrusions, and Communication Systems business. Quite a mouthful.
Okay.
That sale was completed on May 1st, 2025, right in the quarter, and that gain significantly inflated the bottom line for Q1.
So it's less about a sudden, massive operational boom and more about strategic pruning.
Yeah.
Felling off a piece.
Precisely. Strategic pruning is a good way to put it. It boosted the numbers massively for this quarter, but it's a one-time event tied to that sale.
Right. So while that windfall looks great on the Q1 report, it does make you wonder about the organic growth picture moving forward. Or is this maybe just them clearing the decks, selling something off to fund future investments?
I think it's definitely more the latter. This isn't just about banking a profit. It signals they're actively reshaping the company.
Right, refining the portfolio.
Exactly. Selling off maybe non-core or perhaps lower growth assets to free up capital and focus for future-facing technologies. It feels like a very deliberate strategic move.
Okay, that makes sense. So with that context, strong underlying growth, plus this big divestment gain, let's dive deeper. Where's the revenue actually coming from? What do the different business segments tell us?
Yeah, this is where it gets interesting. The Mobility Solutions segment was really the engine here. It was up 14.3% compared to last year's quarter.
Okay, strong growth in mobility.
Very strong. And within that, Power Solutions grew 13.7%. The mobility aftermarket was up 5.2%. But the standout was the two-wheeler segment.
The one you mentioned earlier.
Yeah, it saw just remarkable growth, 75.4%.
75%. Wow. What's driving that?
Well, it lines up pretty well with broader trends we're seeing in the Indian auto industry overall.
Like what?
So you had really strong year-on-year growth in tractors. You've got significant EV momentum, especially in the three-wheeler space.
Right.
And there was this interesting thing with heavy commercial vehicles, some pre-buying happening.
Pre-buying, why?
Ahead of a new air conditioning mandate. And basically, Companies buying trucks before new regulations potentially make them more expensive.
Got it. Clever.
Yeah. Meanwhile, passenger cars saw, moderate gains, but like commercial vehicles, actually softened a bit.
And Bosch's tech is right in the middle of this, especially in EVs and two-wheelers.
Absolutely. You look at recent vehicle launches by Indian OEMs, the car makers themselves, and they're featuring key Bosch tech.
Such as?
Well, for EVs, their vehicle control unit, the VCU, it's like the brain, right?
Yeah.
Coordinating torque, charging, thermal management, really crucial stuff.
Okay.
And things like their electric coolant pumps, essential for keeping EV batteries cool and efficient.
And for that booming two-wheeler market.
Yeah, it's about their advanced engine management systems. Things like the engine control unit, fuel injectors, lambda sensors, pressure sensors, all key for performance and fuel efficiency.
So mobility is clearly a powerhouse, fueled by this tech. What about the other parts of Bosch? Consumer goods, for instance.
Right, good question. Consumer goods, it grew by 9.3% compared to last year's Q1, so decent growth there.
But, sense a but.
Well, yeah. Sequentially, compared to the previous quarter, Q4, it was actually down 20.3%.
Oh, okay. So some volatility, maybe? Or facing tougher competition, perhaps?
Could be. It suggests maybe not quite the same smooth upward path as mobility right now.
And the other segment, energy and building technologies.
Yes. Now that one saw a really significant decline. It was down 65.3% quarter on quarter.
65%. Down.
Yeah, and down 64.7% sequentially too. A huge drop.
And is that linked to the business they sold off?
Directly.
No.
That big drop is pretty much entirely explained by the sale of that video solutions, access and intrusions, and communication systems business we talked about.
Ah, okay. So that business was part of the energy and building tech segment.
Exactly. This was all part of a bigger global realignment of Bosch's building technologies division. So you're seeing that strategy play out very clearly in these numbers. They shed a big piece of that segment.
Right. Shedding a legacy business to focus elsewhere. It all seems to be fitting together.
It does seem quite coherent, yes.
So putting it all together, what does this quarter tell us about Bosch's overall strategy? It really feels like they're making some big, deliberate bets, right? Selling this, investing in that.
Absolutely. And you can hear it in the management commentary, too. Guru Prasad Mudlapur, the MD, he basically said, look, the Q1 performance shows strong growth, helped by revenue increases, demand in passenger cars, better product mix, reducing material costs.
Standard stuff.
Right. But then he added, this results from our consistent efforts to strengthen our core businesses while remaining focused on future-ready technologies.
Okay, so reinforcing the core, but with an eye firmly on the future.
Precisely. And we see concrete examples of that future focus, like a key new investment they just approved.
What's that?
They're putting ours $40.50 million into a company called JSW Renew C&I 1 Limited.
Okay, JSW Renew. What for?
It's to subscribe to 26% of the equity in a new 12.66 megawatt DC group captive solar power plant being built in Maharashtra.
A solar plant. Interesting. Why are they doing that? Just for green credentials?
Well, the stated reason is very practical, to secure green power at cheaper cost.
Ah, okay. Makes sense for a big manufacturer. Control energy costs, get greener power.
Exactly. It's about operational resilience, cost control, and aligning with sustainability goals. For a company Bosch's size, locking in cheaper, greener energy is a smart strategic move. They expect it to be completed by January 2026.
So it's not just PR, it's actually about the bottom line and long-term stability too.
Definitely. And it fits perfectly with their broader stated direction. Bosch Ltd says it's investing decisively in hydrogen, electrification, and digital services.
Right, the future stuff.
Yeah, aiming to be at the forefront of sustainable mobility. This isn't just Bosch India either. It reflects the global Bosch Group strategy focusing on these big universal trends: automation, electrification, digitalization, connectivity, and sustainability woven through it all.
They're clearly placing their bets on where the world is headed.
Seems that way, making calculated choices about where to invest their resources.
Okay, so let's quickly recap the story of Bosch's Q1 FY26 then. We had strong overall revenue growth.
Yep, about 11%.
A massive jump in profit. But we know now that was heavily driven by selling off that specific business unit.
The exceptional item, yes, though the underlying profit was also up nicely.
Right. And clear momentum in the mobility segment, especially driven by two-wheelers and their technology for EVs and newer vehicles.
Definitely the star performer.
And underpinning all this, a clear strategic direction emerging, selling off some older parts of the business to double down on investments in things like green energy and future mobility tech.
Yeah, that really seems to be the narrative. What's fascinating, I think, is seeing how a giant company like Bosch is actively reshaping itself in real time.
Yeah.
Well, you see these two things happening side by side, right?
Hmm.
On one hand, they're, cleaning house, refining the portfolio with these targeted divestitures.
Selling off the video and comms stuff.
Right. And on the other hand, they're making these very specific forward-looking bets, investing in renewable energy for their own use, pouring resources into cutting-edge EV tech, hydrogen.
So the big question
The
is,
big question for you listening might be, how do these seemingly quite different actions shedding traditional businesses while embracing green power and advanced mobility, how do they actually fit together? Do they paint a picture of a truly cohesive strategy for Bosch to stay innovative and resilient as the whole global market keeps changing so fast?
right. A cohesive strategy for resilience. That is definitely something to chew on. It's much more than just a set of quarterly numbers.
Absolutely.
Well, that's a great place to leave it for today. Thanks for joining us on this deep dive.
My pleasure.
And as always, we encourage you to keep digging and keep exploring.